45% profit. You think I'll wait for double. It reverses. 23%. Break even. Now you're red. You tell yourself I'll hold until expiration. But expiration comes and you're wiped out. The entry was perfect, the setup was clean, you made some gains, but you never locked them in and you gave it all back. Why? You had no exit system. I'm going to show you 3 mechanical rules that separate the traders who keep their profits from the ones who hand them back to the market. No guessing, no emotion, just if then logic. Here's what's messed up. Most traders obsess over entries, hours on the perfect strike, days on the perfect setup, charts, Greeks, IV rank, all of it. And then they completely wing the exit. I'll sell when it feels right. Let me give it one more day. That's not a strategy, that's gambling with your money. The irony, exits are actually easier than entries. You just need 3 mechanical rules that work whether you've been trading 2 weeks or 2 years. Every options trade ends one of 3 ways. 1, it's a winner, green. 2, it's a loser, red. 3, it's going nowhere, sideways, bleeding time. Most traders, zero plan for any of these. Professionals know exactly what they're doing before the trade even moves. You need a mechanical rule for each. Think of a winning trade like a dinner party. You arrive fashionably late, you enjoy the food, you're having a great conversation. Then, here's the key. You leave while the party's still good. You don't wait until it gets awkward. You don't stay until the host asks you to leave. You don't linger until you're helping clean up at 2 a.m. You leave while it's still fun. Same with winning trades. Exit while it's still good. Don't wait for the reversal to tell you the party's over. Here's the mechanical rule I call the 50-25-25 split. You break your position into 3 parts. Each part has a specific job. You sell 50% at 50% profit. You've now locked in gains. You're profitable no matter what. All the pressure is gone. Sell 25% at 100% profit. This is your runner. You've banked real money, but you're still in the game for a bigger move. Then you trail the final 25% with a 25% stop from the high. This is house money. If it keeps going, great. If it reverses 25% from the peak, you're out. You cannot lose. 3 exits, 3 jobs. You'll never hand back a winner. You'll never kick yourself for leaving money on the table because half of your profit is already banked. You buy 10 contracts at $5 each, total $5,000 invested. The trade moves up, you're at 75 per contract, that's 50% profit. What do? You sell 5 contracts. You just bank $12.50. Your remaining 5 contracts are now risk-free, zero stress. If it keeps moving, now you're at $10 per contract, 100% profit. Sell 2 to 3 contracts. You just banked another $1,500. You're now holding 2 contracts with a trailing stop at 75. If it rips to 15, you make another 1,000. If it reverses to 750, you exit with 2750 plus profit intact. Same stock, same direction, mechanical exits protected your entire win. Now the second scenario, the trade is going against you. Think of it like a sinking ship. Small leak, you patch it, monitor it. Water rising, lifeboats are ready. Ship listing to one side, abandon ship, get out. You should never go down with this ship. You'll go bankrupt in no time. Your job is to preserve capital so you can trade another day. That's the mindset. Professional traders cut losses fast, amateurs hold and pray. Rule 2 has 2 parts. Whichever triggers first, you exit. No exceptions, no negotiations. Kill switch 1, the price stop. If you're down 25% of what you paid, you sell. Period. You paid $4, it's now $3, you're done. Not let me see if it bounces, not maybe tomorrow, you're out. Why 25%? Because the math of recovery is brutal. To recover from a 25% loss, you need a 33% gain on your next trade. That's a normal move, but if you wait until you're down 75%, you need a 300% gain just to break even. You've effectively ended your trading career on one bad trade. Do not do that. Kill switch number 2, the time stop. If you hit 7 days to expiration and you're still red, you exit. Why 7 days? Because time decay doesn't move in a straight line. Theta, time decay, burns slowly at 45 days out. It picks up speed at 21 days, but that final week, it's a blowtorch. Every day you hold a losing position into expiration week, you're watching money burn. The math is just against you. Cut it, move on, find the next setup. Two traders, same bad trade. Trader A hits the 25% stop, exits, lost $250, still has $9,750 left. Trader B hopes for a bounce, holds through expiration, lost $2,000, now has $8,000 left. One bad trade shouldn't define your month. A 25% loss is survivable. A 75% loss is a career threat. This rule alone will save your account from total blow up. Third scenario, the trade isn't winning. It isn't losing either, it's just stuck. Think of it like a parking meter. You paid for 2 hours, 1 hour in, your meeting hasn't moved, no progress. Do you keep feeding the meter hoping the meeting ends soon? Or do you cut your losses? Leave and find something productive to do with your time. That's opportunity cost. Your capital is stuck in a dead trade. Meanwhile, other setups are moving, you're missing them because your money is trapped. Time is a cost, even when price isn't moving. Theta, again, is eating your premium. Rule number 3, the halfway plus halfway rule. You exit if both of these conditions are true. Condition 1, you're halfway through your time. You bought with 40 days to expiration, now you're at 20 days, halfway through. Condition 2, you're not halfway to your profit target. You wanted 50% gains, you're only up 15%, not even close to halfway. If both are true, you exit. Why? Because you've burned half your time and made less than half your target. That trade isn't working. Again, time decay is about to accelerate exponentially. Your capital could be working somewhere else. Let's say SPY call, 40 days to expiration, target 50% profit. We fast forward 20 days, you're up 15%. Halfway through time? Yes, 20 out of 40. Halfway to target? No, 15% is nowhere near 25%, let alone 50%. Decision? Exit. The math isn't working. Get out and redeploy capital to a trade that's actually moving. This rule prevents hope trading. It prevents you from sitting in dead positions while the market moves without you. Here's how you tie it all together. Screenshot this, save it, reference it on every trade. Before you check your P&L, before emotions kick in, you run through this flowchart. Step 1. Check your position. Is it green? Yes. Use the 50-25-25 rule. Scale out, lock profits. No, go to step 2. Step 2. Are you down 25% or more? Yes. Sell immediately. Kill switch 1 triggered. No, go to step 3. Step 3. Are you at 7 days to expiration? Yes. Sell immediately. Kill switch 2 triggered. No, go to step 4. Step 4. Are you halfway through your time and less than halfway to your profit target? Yes. Sell, trade isn't working. No, hold, let it develop. That's it. That's the entire system. No guessing, no emotions, just if then logic. This removes 90% of the stress from trading. You know exactly what to do in every scenario before the trade even moves. You now have a complete mechanical exit system. Will you exit too early sometimes? Of course. Will you leave money on the table? Absolutely. But here's what you won't do. You won't turn winners into losers. You won't let losses wipe out your account. You won't sit in dead trades while opportunity passes you by. Exits aren't about being perfect. Exits are about being mechanical. Professional traders do not have perfect exits. They have consistent exits. That's the difference between a trader and a gambler. If this clicked for you, hit subscribe. Your next video drops soon. Position sizing, how much to risk per trade without blowing up your account. But before you go, here's your homework. Pull up your last 3 trades. Look at how they ended. Which exit rule would have helped each one? Comment below. Rule 1 saved me. Rule 2 would have cut my losses. Rule 3 would have freed my capital. Let's see who actually executes the system. Traders who apply mechanical rules to every exit are the ones building consistent accounts. The ones who skip this step, they're the ones asking for magic setups while ignoring risk management. Don't be that trader. See you next time. Trade smart.